Rwanda's Monetary Policy Committee has revised Rwanda's benchmark lending rate from 6.5% to 6.75%, which is a 25 basis points. And today I am joined by Eric Niyongira, who is a Research and Partnerships Officer at the Rwanda Bankers Association, who is going to shed light on the banking sector's perspective. And we are also joined by Karobia, who is an investment manager at BK Capital, providing insights from the investment and also market viewpoint. Gentlemen, a very good morning to you, and thank you so much for your time again. We did have the governor speak there, and we did see quite a number of sectors in terms of their performance. So I'd like to kick off with you, Eric, in terms of the banking and financial sector perspective here. How are we likely to see this reduction of the policy rate to 6.75% affect bank liquidity and also lending to SMEs and households? You said it's likely to hold, but we have seen some changes. This is quite a shocker. Let us kick off from there.
Thank you very much, Davida, for that. And allow me to start saying that it's a bit surprise, but again, it's always good to look this like in multi-dimensional level, because with the policy trade-off, it's always good to look at the inflation, but also on the economic stability. So if I may refer to risk-free instruments, it's good to also make Rwanda attractive maybe for investors who are looking for maybe higher returns, looking at managing our local currency, but also ensuring the stability. So we are not expecting big changes in terms of banking sector with 25 basis point increase, because it's still within the corridor of the policy rates. But also when it comes to SME lending, we even seeing them being more cautious and conservative. Though lending is increasing, but also looking at those all mentioned, like external pressures, including a decline in commodity price, geopolitical tensions. It's always good to look at them and also consider those all aspects to make sure that it's not being exposed to risks or any change that might happen. But in the nutshell, we're not expecting a lot of change on the market in terms of lending.
Kevin, this is not what you are expecting.
Yes. That's true. We expected them to hold in this cycle, but we've seen it's actually the first time in quite a while that we've seen the Monetary Policy Committee adopt a hawkish stance, where they've just looked at inflation and seeing inflation coming close to 8%, still not there at 8%, but steadily increasing, and they've decided to hike rates. Traditionally, would have maybe seen them wait until we are at maybe close to 8% to hike, but it's really the first time that we've seen them adopt a more hawkish stance. So in terms of how we look at it from a capital markets perspective, it's a win, given that we would expect to see at least a bit more flows into Rwanda instruments. You expect to see better rates from you expect to see better rates on government instruments. So you'd expect to get at least higher returns for investors in the fixed income market. If you look at the equities market, we don't expect it to be a big blow, because it's only a marginal increase. And given that we could see currency stability could be a positive, given that we've heard governors say that the trade deficit actually narrowed for the first time in also a while that it narrowed in the quarter. So we'd expect to see slightly lower import costs on some of the companies listed on the Rwanda Stock Exchange, and continue to see investors flow into them.
Indeed. And Kevin, Eric, is this how many more cuts should we expect? I understand this is the Q3 of 2025. We just have one more quarter to go. So how many more cuts should we expect? Or, from your own perspective, are we seeing this being a shallow decision compared to maybe what the region is looking like? We did have Kenya maintain, Uganda revised at the same time. What are we seeing here?
Well, thank you very much. I think since it's always good to look at the benchmark on the regional side, but also looking at the internal or domestic pressures that we've been seeing, they have been all at the decline trend. So personally, I'm not expecting a further increase on the central bank rate, but rather BNL staying vigilant to look at the changes that might happen and further adjust the rates.
Kevin?
Yeah, I share the same sentiments.
Yes.
Given that now we have a rate hike, first one since we had the high inflationary pressures, so I agree with Eric that we don't expect to see any more hikes, given we only have one cycle in November. We expect that inflation should ideally come down, although it's also susceptible to some of the shocks that, for example, poor agricultural harvests or adverse weather conditions that could see increased pressure on the food basket. That could mean inflation could remain sticky for a while.
Mm-hmm. And the governor also did cite quite a number of global dynamics impacting this decision. Maybe you can just recap some of them in terms of the energy prices that we did see there, Kevin.
Yes, that's true. On an energy perspective, I mean, we've seen a lot of volatility and fluctuation in oil prices. We are at a point where we never know what the oil price is going to be next week. For example, something could come up and all of a sudden the oil prices have gone up, or we could see higher production that could see prices go down. So we've been in that situation where from an energy perspective, we've been susceptible to most of those shocks. And that has also reflected also in the inflation basket. If you see energy prices and baskets that are directly attributable to fuel prices have seen that increase. So also in line with what Governor and what also Eric has alluded to is they remain very cautious in monitoring global developments keenly, because they eventually translate a lot to what we see in terms of local inflation.
And the local inflation there. And from global to now domestic impact, what have you noted there, Eric? What are we likely to see moving on?
Yeah, and maybe touching based on what Kevin said, we've been really seeing a lot of disruption in global supply chain, but we don't expect more due to ease of maybe those geopolitical tensions or issues coming down, even the trade tariffs. But domestically, with those easing pressures we've been seeing, we're also expecting a kind of an easing pressure in terms of liquidity, and this is also now translating to private sector growth. Yep.
Indeed. All right. Now let us look at how this policy rate is going to impact a number of sectors. We can go by various sectors, and let us start with where you are at, Eric. That is on what impact we are likely to see in terms of the loan demand and also repayment behavior across the sectors.
Yeah, thank you very much. Mm-hmm. And needless to say that SMEs have a huge appetite for financing. They need money for paying their invoices, run day-to-day businesses. And this is really boosted by the decisions that we're seeing here. But we've been seeing demanding steady and increasing loan demanding, but also cautious, like conservative, because these global tensions or disruption also are disrupting the supply chain, which might also put SMEs or other sectors cautious, whether like the decline in commodity price or in terms of transportation, oil, we've been saying that it's going to disrupt or narrow down the profit margin. So this is by default going to create some changes. But in the nutshell, allow me to talk about the partnership that we've been seeing, either including Terimbere's MSME facilities or these newly launched 30 billion RSSB SME funds that are also going to back with the banks to take more risks in terms of lending to these sectors. So we are not expecting a lot of changes, but of course, as they mentioned, with the cautious measures. Yeah.
Cautious measures there. So, Kevin, from a banking perspective, how is the banking sector preparedness in terms of managing potential risks while at the same time supporting economic growth under this new policy rate?
I mean, one of the things that we could see following this is, and also looking at what has happened across the region, is when we see these rate hikes, we also see some pressures on NPLs, given that we might see some sectors struggle to repay. For example, from the governor's presentation, so that for the construction and trade sectors, they account for more than 35% of loans being issued by banks. And these are sectors that feel the impact of rate hikes almost immediately. The real estate sector, costs of it's also very capital intensive. They have to seek capital, a lot of capital for them to execute their mandates, and now the borrowing, getting access to that capital will be more expensive. In the trade sector, we still import a lot more than we export. So we'd expect to see a lot of pressures on the trade sector. Now traders have to factor in a higher cost of borrowing before they import goods and sell them. So looking at how the banking sector could mitigate, and also other players in the financial sector, is we need to get to a point where the credit averse or risk averse stance being taken on by banks needs to reduce a bit. We need to see more credit flowing into some of these critical sectors. And also alluded also by Eric, measures that are being done by other players just to try and improve credit to sectors. Even at BK Capital, having a private debt fund that is really looking at bridging that gap. We know we have a long existing gap, credit gap, between what is being supplied by the banks and what is really needed by the economy. And it's now for us as all players in the sector to continuously see how we can continue to support these sectors by providing the much needed credit.
Mm-hmm. And just very briefly, where might investors see headwinds, and also how do they navigate through that? Eric?
Yeah, so he said about it, investors are always looking for better returns or looking at the market where there is a high profit margin. And with a slight increase in the central bank rate, we're expecting also Rwandan market to gain a lot of appetite for investors. So I think for that, we might expect an increase in capital inflows. But also one thing I wanted to touch base on credit is the decrease by the government in terms of securities is also pushing or creating space for banks to lend more to private sector, which will also increase the credit flows to businesses in various sectors.
All right, gentlemen, we'll leave it there. Quite a number of movements we are likely to see moving on. So Eric Niyongira, Research and Partnerships Officer at Rwanda Bankers Association, and Kevin Karobia, Investment Manager at BK Capital, joining us on Rwanda's MPC for the third quarter of 2025, which has just revised its benchmark lending rate from 6.5% to 6.75%. That is a 25 basis points hike.